I am not a financial advisor, and this podcast is for informational and educational purposes only. The content discussed here is not intended as financial, investment, tax, or legal advice. Always consult with a qualified professional before making any financial decisions. Past performance is not indicative of future results. All opinions expressed are my own. Aloha and welcome back to the week that was. I am your host, Colin Edsman, and this is your weekly market recap. Now, I hope you had a great week. There's a lot to discuss, from SpaceX IPO possibility being next month. We got Bitcoin price action, hot CPI, bonds, treasury bonds, macro big picture. Also, Robinhood Ventures did some huge gains this week. But before we get into it, the overall local economy here in Hawaii still a little bit on the pressured side due to the oil prices. I'm seeing news that tourism is taking a bit of a hit due to the oil prices and gasoline prices, jet fuel prices, and now it's pushing on, well, travel costs, right? So this could be a slow summer for Hawaii as far as tourism goes, so be on the lookout for that. Maybe we try to consider some other direction as far as trying to get people to come and visit to continue to boost our economy. The Kona lows, the storm that had hit Hawaii twice, has still left a pretty big scar on the economy, as well as leaving us in need for a lot of funding. But on the stock market standpoint, let's get into some market news. So the overall markets this week, we closed up we closed on the red side today, but this week was a little bit on the choppy side. The major indices showed some chop, but largely held their ground or finished modestly positive this week, despite the rough Tuesday. So this past Tuesday, May 12th, the headline of the day was a hotter than expected April CPI report sent tech and chips lower for the day. The S&P 500 closed down about 0.2% and at around 7,400. The Nasdaq dropped 0.7% to 26,000. Tech and AI names took a bit of a hit. If you've been watching the markets at all, you know there's been a huge rally, so we've been due for a bit of a cool off. Right? So, as you can tell from the title of the pod, maybe we're due for one. I'm not quite sure. I don't go and hunt for the top. It's a fool's errand. If you were, you would have been wrong for weeks, because this was some unprecedented level of movement. But nothing trades straight up, so expect some downturn. Markets recovered later in the week. The S&P 500 and Nasdaq had been hitting fresh records in the days prior. The broader participation helped. For the week, the S&P 500 was roughly flat to slightly up. Dow up modestly, 0.3%, while Nasdaq was a bit on the softer side. Energy, industrials, materials outperformed midweek as oil spiked Small caps were mixed, but the overall takeaway, stock showed underlying strength. AI momentum paused, but did not break. It's not a bubble here, gang. This is just a bit of a cool off. This is healthy. And the economy looks resilient enough to absorb the inflation shock without a meltdown. Now, if you're going to ask any type of what's going to happen question, the answer is always going to be look to inflation, because that is the big umbrella that covers the entire market. Just if things get inflated, costs go up, because inflation can be multiple things from energy costs to goods, materials. It all comes down to the inflated price. Now, the next thing is bond markets. Now, if you are an active trader or any kind of trader that does this on a regular basis, you may want to ignore it, but you can't. The bond market is important, super important. Now, there's a bit of a pain thing going on here. It's been flashing for a while though. Like I talked about this maybe like a month ago before this rally started, that the bond market is just becoming just ridiculously overpriced. Here, let's look at some numbers. The 10-year Treasury yield climbed sharply, hitting around 4.46 to 4.60% by mid to late week, multi month highs. The 30-year pushed towards 5%. Some reports noted over 5% at 5.1%, also the highest in months. So we got a high stock market as well as a high bond yield on the 10 and the 30. So it seems that the stock market just does not care about the oil prices quite yet. It just hasn't been baked in yet. We did get a new Fed chair this week. Congratulations, Mr. Walsh. We're going to have to figure out some kind of nickname for you. Like, well, Jerome Powell had DJ Pow Pow, so we're gonna have to come up with some sort of Walsh nickname. But we're gonna let him get through a couple of meetings first before we start labeling him something. Now he's pro crypto, pro Bitcoin, so that's good. But he's kind of picked up a tough job at this point. We're seeing possibilities of rate hikes getting priced in. It all just comes back to inflation. You're going to see mortgage rates above 7%, and that's bad for the overall economy. So, for simple numbers, let's say the entire U.S. market, stock market is 1 trillion. For simple numbers, it's not. It's somewhere in like the 50 trillion or more. But the housing market in the US would be like 900 billion, right? They're almost comparable. So you need the housing market to do well because that's almost half of how our country runs. So we need to get that in check, and that comes down to the bond market. But I don't know what's going to happen. This is just something we have to keep an eye on. Now, the overall big picture, like I said, inflation. April headline CPI came in at zero point 0.6 month over month, up. Also up 3.8% year over year. Highest annual rate since May of 2023. And hotter than expected. And it's hotter than expected. Core was about almost a 0.5% month over month and up 2.8% year over year. Energy drove over 40% of the monthly jump, and no one surprised by that. If you're looking at the gas price at all, you're noticing increases, which means people drive less, which means people have to spend money differently. This is going to bring down the overall spending from the consumer. We don't know if that's priced in yet because the stock market has been roaring up until this week. Like I said, it traded basically sideways to modestly up. I'm going to keep an eye out on if it's going to trade sideways more. The last time it did that for an extended period of time, we got a bit of a downturn. And if we're looking at the moving averages, which we'll get into later, uh, the S&P 500 should be somewhere about 7,000 on the maybe 50-day moving average. Here, let's take a look for a quick second what it should be. Ah, here we go. So as you can see here, this is the SPY. The easiest way to just kind of double check what the S&P 500 is as far as moving averages go. So this chart is, let's double check, from January of this year till now. So we're back up just to, okay. Chill out, Mr. Computer. Jeez. He's doing a hula. Okay. So as you can see, the all of the moving averages except for the 20, which is in the Bollingers, uh, is sub 700. Did you hear me? Yeah. Sub 700 or 7,000 on the S&P 500, which tells us that we're going to get some sort of reversion to the means going on soon. And because of that, we need to keep an eye on when this market trades sideways. Because if it's going to trade up, down, up, down, up, down, it's kind of hit a ceiling, which is a pretty decent indicator that the market's about to cool off. And if it does cool off, it's going to come down to the 700 range. It's all like compacted there as well. Here, I'll bring it back up one more time before we move on. But as you can see, there's a huge like the obviously the market price is up here. This is where my ass thought it was going to stop. I was obviously wrong. Uh, but as you can see, all of the moving averages are compiled into this one area between, oh shizzle, 689 and 676. I'm too old for that. I'm not going to do that. I'm an old man. But we're somewhere between 6.7 and that's hilarious. 669. That's also hilarious. So somewhere between 6.7 and 6.9 is where the moving averages have sort of settled out. So we're gonna see cooling off. Like this chart is just chill, 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 downturn because of war, and then bang, rip. So on this, we're also seeing some broader sell-offs going on. I saw some notes of Bill Gates selling off all their Microsoft shares. What? What? That's insane. But this could be more of a sell in May sort of indicator. Uh, we'll have to see moving forward. I've sort of been putting out my hedges, putting out covered calls slowly over the last maybe week or so, because I don't suspect we're gonna get a lot of continued movement. Now I've got like Intel, Air, those are doing great, but we got like VG sort of sideways, Next Decade sort of sideways, Robinhood is stuck with the price action of Bitcoin, but I'll bring that up in just a moment. We'll continue on. Now, thank you for sticking around me so far. Now we're going to get into... Let's double check we close this off. Okay, so let's just finish off the big picture here. Oil still elevated. Fed policy. Rate cuts in 2026 are largely priced out. Like I said, hikes could be coming. Some traders have even bumped up the odds of a potential hike. Like I said, I don't know who these traders are. It's a script. around 30 to 37% in some spots. The Fed is firmly in the data dependent, hold steady mode under the new leadership environment. So expect Mr. Walsh to have some growing pain meetings. I expect the mentioned markets will have a rip roaring time with his very first meeting because we don't know how he speaks quite yet. So it's going to be a little bit difficult to price in what he'll say. But we can sort of surmise there's a couple of things that he'll have to say. So those will be highlight chances of profit, right? Always look for high chance of profit, not gambling. Prediction markets is not gambling. If you're gambling, might as well just burn the money now, right? You're looking for a strong possibility of a yes. Oh, thank you. I appreciate the headphones look good. Thank you, thank you, thank you. It's giving me a bit of a like 1990s vibe. I kind of dig the entire vibe going on as I look at what I look like in this setup. Color looks good, headphones look good. I'm also seeing that some movie stars and actresses and models they're starting to bring back the wired headphones. I don't know why. I saw some other podcaster talking about it that the popularity of wired headphones are coming back. Maybe people just don't want another thing to charge, or honestly, the AirPods are super duper easy to lose. Like I try not to have both out at the same time without having the case like nearby because I know like I'll just lose it and that's it. It's with God now. But here's some closing thoughts on the actual overall macro and the initial S&P 500, Nasdaq, global, Fed markets go. This was a kind of a reminder that geopolitics can still jolt the markets. Stocks proved resilient. Earnings and AI themed provided a floor, but bonds and rate sensitive assets are still feeling the heat. Watch upcoming retail sales, PPI, and the de escalation in the Middle East for the next moves. Oil cooling off would be the biggest positive catalyst. We need that to come down. We can check it, but it's over $100, so no sense pulling up the chart for that. Crude oil futures is finished off the day over $100 because I was considering putting a position in over the weekend, but I'm like, why guess? No sense. All right, so next up, we're going to be talking about SpaceX IPO hype. Oh man, everybody's talking about it. So I'm going to bring up a little bit of my thoughts on it. So SpaceX has been private for over 20 years under Elon's leadership, but things sort of accelerated. The company's confidentially filed with the SEC back in April 1st. That's hilarious. Now, as of mid-May, they've accelerated the timeline, targeting a pricing as early as June 11th, and a Nasdaq listing ticker something like SPCX. Now, I did see people playing around with, hey, why don't you just make it SEX? That's hilarious and super immature, so we can't do that one. So SPCX would be the possible ticker, and we could be seeing SpaceX IPO as early as June 12th. That's what day is it? 15th? That's less than 30 days from now. So let's just say we could see a lot of people just selling off huge swaths of what they don't necessarily feel like holding to put money towards this IPO exposure. Here, let's look at some numbers. The valuation. They're aiming for 1.75 trillion to potentially 2 trillion. Jeez, at IPO. That would instantly make it one of the largest companies by market cap. The day it goes public, it could literally be one of the largest companies. I don't know how that works. Like, what do you just instantly get on the S&P 500, automatically on the Mag 10, Mag 7? Or, I mean, most likely SpaceX will absorb Tesla in some way, so we'll get SpaceX as the replacement there uh, on the Mag 7. I don't know. This is all wild speculation. Here, more numbers. Expected to bring in 50 to 80 billion, dwarfing previous records like Saudi Americo. Like, this is their raise. 2025 financials, this is what they reported. Roughly 15 to 16 billion in revenue and about 8 billion in EBITDA profit. EBITDA. Starlink is the cash engine. Starlink is on almost every major airline. I'm seeing people who are saying they will not choose an airline without Starlink because it's become such a necessity, especially for us as traders, as podcasters. We now have access to the internet in that 4, 5, 2 hour flight span. For me, it's 4 or 5 hours no matter what, because I'm in the middle of the ocean. They're not putting Starlink on my inter island flight. That's no sense. That's like 40 minutes at the most. But for the 5 hour flight from Honolulu to the mainland, oh, that would just be a godsend. You wouldn't be dragging the overall bandwidth on the airplane. Everybody can do their own thing. People can get to their own lives. It's increasingly difficult for people to sit that long without having access to steady Wi Fi, which makes people pretty agitated. So, this keeps the overall vibe of the air a little bit on the chiller side. Now, air travel and space travel are naturally dicey. Like, we're playing with physics here, and then we're trying to be like, nah, I don't feel like listening to you. I'm gonna fly. So, just congratulations. Starlink is a big part of SpaceX's financials. So, we're gonna be seeing Starlink as a big cash engine driving the now stock market because it's going to be a public company, one of the largest ones. Now, there are 9 to 10 million subscribers for Starlink at the moment, driving a majority of the revenue with strong margins. Launch business Falcon, Starship, adds the rest plus growing AI slash space computing angles post XAI ties, right? They're bringing that all together, right? Elon is just kind of mushing them all together and making some sort of Michelangelo's David out of all this clay. Now, this isn't cheap multiples by any stretch of the imagination. We're talking sky high price to sales if you're looking at current numbers. But bulls argue it's a three engine empire. Reusable rockets, dominating launches, Starlink as a scalable internet play, and the long term Mars slash multiplanetary vision. Investors like Ron Barron are calling it a future, quote, largest company on the planet, close quote. And if I'm going to be bullish, largest company interplanetarily. Yup, that's the word. Nailed it. What makes this IPO unique, though, is up to 30% of the shares could go to us as retail investors, way above normal IPOs. Expect massive oversubscription and retail frenzy. So, this would be a good time for people to start selling off their profits. So you're going to see a downturn, but right when SpaceX IPOs, you're going to see a massive retail investment. Okay, so I'm still not 100% sure how I'm going to play this because you got VCX, you got DXYZ, which is another closed end fund, and this is just a straight up guess. maybe even Robinhood Ventures Fund 2. Now, they didn't say where they're going to put that out, but if they could get that out like a week before. No, what would be the point? That would be super pointless. Never mind. So we're down to VCX and D ticker DXYZ, both close-end funds. VCX on the I wouldn't touch. Like they flew and came back down. Here we'll look into them for a second. Since we're talking SpaceX, we got to know. There we go. I'm in the middle of the Pacific Ocean, so things move real slow. Damn, I need Starlink. Oh, right, here we go. Once this feels like loading, we can see the price action of VCX. This is a kind of a good indicator of how people are expecting SpaceX to move. Excuse me. You gotta try to do two things at once, huh? All right, let's back up a bit. So as you can see here, it started on the low side, $75, and then ran and ran and ran all the way up to 300, and now we're back at 195. I'm not in this. I'm not in this one, but I have heard that the shares itself are locked up till like September. So you're not even allowed to sell what you bought till later on this year. So we could see a bigger move after the IPO of SpaceX, but what would be the point? I imagine that you're trying to get in there beforehand, and right before SpaceX IPOs, or when they list that they're about to IPO, you pull out your profits from here and you put it directly into whatever you can afford for SpaceX IPO. The shares could come out at like $1,000 right there at the IPO price, and then shoot up for all we know. I'm not quite sure. This is going to be a very interesting IPO. So moving forward, it's just going to be kind of dicey. So personally, I don't like to mess with dicey. So I might just sit on the sidelines, or maybe just a small exposure to kind of see what happens here. Like I'm not fading it by any stretch of the imagination. Like this is good stuff. I just don't trust us as retail investors to invest wisely, but not extremely bullishly and stupidly at the same time. There's numerous examples how the retail investor has sort of moved a market in the completely opposite direction than that stock price was supposed to go. I'm not going to list any examples. But on another couple of reasons why this IPO is unique is Musk will retain heavy control with super voting shares. It's like your shares weigh more than individual shares. Like a sun and a neutron star, right? A sun is quite big, like even like our sun, our star, quite big. But then you got a neutron star, which is by size sometimes smaller, but by weight millions of times heavier. Like a spoonful of a neutron star could weigh as much as a planet. Yep, I'm gonna stick with that. All right, so this IPO could suck up a ton of liquidity in June, but it might also spark a broader space boom in public markets. If you're an investor, get ready. Secondary shares have been trading hot privately, like I said, and showed you. Once it lists, expect volatility worthy of a rocket ship. That's for damn sure. Whether you're bullish on multiplanetary future or think the valuation is pure hype, SpaceX is going public. SpaceX going public is going to be the market story of the summer, if not the year. Who knows? People could be rolling out their SanDisk profits into this, and who knows? The rest of the year could just be rocket talk. From Rocket Lab to Space Mobile, ASTS, I think is a ticker for that one. My God, just bullish all over the place. But we're going to take a quick break. I'm going to see you back here in 1 minute. All right, thank you and welcome back. I'm not quite sure if that ad was dodgy or not. Let me know in the comments if it was. For my end, it was a bit on the skippy side, but I'm not quite sure if that's how it projected out to you. We gotta have a gremlin or two. I'm not a professional podcaster. As good as this looks, and as great as I sound, I'm a noob at this. But next up on the docket, let's get into some Bitcoin price action. So this week, Bitcoin was moving a little bit, right? So we're going from rockets to a little bit of digital here. This week, Bitcoin showed its classic resilience amid macro turbulence, holding steady in the 79 to 81,000 range, despite the hot CPI print and the oil driven inflation fears. Now, I have to admit, Bitcoin's been real strong, real support, like real strong support throughout this whole crisis. Now, it has been stuck under that kind of 82,000 range, maybe 85 if we get some bullish movement towards the end of the month. Who knows? I'm not quite sure. All we gotta do is buy and wait. This area is prime collection area. Excuse me. Sprite's coming back up. Excusez-moi. So Bitcoin opened the week around 80,800 to 81,700. Dipped midweek to about 79,200 to 79,500. On Tuesday, Wednesday, as a hotter inflation data hit, then recovered to trade near 80,000, 81, oh, 80 to 80,000, 80 to 81,000 Thursday and Friday. It's up modestly on the month, around 7 to 11% from the early May lows, but still down 20 to 23% for the year from a year ago levels when Bitcoin was pushing much, much higher. All-time highs remaining about 128,000, and that was hit early October 25th. Yep, I will always remember that time now because of what day that started downturning for the rest of us, or for all of us, honestly. Current levels are consolidating are in the consolidation zone after that peak. The hotter April CPI, 3.8% year over year, and geopolitical oil risk created some selling pressure, but Bitcoin didn't crack lower like risk assets sometimes sort of do. It absorbed the shock and held the 79 to 80K support pretty well. Now, ETF flows were moving at a pretty modestly upward pace, mixed but positive. Early May saw strong inflows, with BlackRock's IBIT often leading. However, there was notable outflows midweek, including a record 635 million outflow on May 13th, the largest since January. I'm not quite sure if that was a sell the May situation, but if we're seeing big outflows from large institutions or large outflows out of well, places like Bitcoin, we got to keep our head on a swivel. If this was easy, everybody would be rich, right? And if you think this is easy, you're a stupid person who's never done this at any high level. This is a very difficult game. Trading always has been. So you have to look at how things move. And if you're not doing enough research, that's probably why you're not making the money you're supposed to, or that's why you're so stressed out when it turns against you. It's important to keep your eyes on the charts and learn them. If you don't understand what the heck you're buying, do not buy it. No one's out there to babysit you and your wealth. That's what you have wealth managers for. You can always put it with them. Or you can just chill on a index fund of some sort. Go risky. Go chill. It doesn't matter. It's important to keep your eyes on a swivel. And if you're not, just park your money. Don't start trying to find the next big thing right now. We don't know what the heck is going on. Things haven't been completely priced in yet, and we're seeing huge outflows, as well as the bond market is not giving us good signals. Now, back to Bitcoin. Broader drivers, regulation tailwinds, progress on the Clarity Act, and shifting away from regulation by enforcement is boosting long term confidence. Despite what a couple of senators and doomers might be saying, Bitcoin and cryptocurrency, blockchain, is good for the future. It's good for security, and when managed well, we can have a strong financial system as well as a strong communication system that's private and transparent. Stablecoin's framework and cleaner rules are seen as major positives for institutional adoption. There's some correlation with the macro though. Bitcoin moved with stocks like Robinhood. Can we get a decoupling, please? Like, ugh. Whatever, doesn't matter. I love them both, but I would love them both to not be so married to each other, price wise. Their beta is like a gravitational pull. Ugh. Whatever. Bitcoin moved with stocks on CPI reaction but slowed relative strength. Geopolitics, Iran tensions, added volatility via oil, but Bitcoin's digital gold vibe narrative gets a nod during uncertainty, right? Because when you're uncertain, you have to sort of put your money in sort of a hedge situation. Gold, silver, Bitcoin, not necessarily in that order. Whatever feels good to you is where you put your money. And for as long as humans have been using metals and commodities and things, when wars happen, there has only been one king, and that king has been gold. So, with the more turmoil and the more wars and conflict we have more time to sort of test whether the new king will be Bitcoin. And if people will start storing their things in Bitcoin, when things start to get dicey geopolitically. Now, the sentiment wise, it's sort of normalizing, and I think whales and institutions are still active. Maybe they're not talking loud about it. But as far as key takeaway goes, Bitcoin is coiling, holding above 70 to 80K despite tailwinds. ETF flows remain the biggest near term driver, while regulatory clarity could be the multi month catalyst. If oil cools and inflation fears ease, a month towards 85 to 88,000 is on the table. But watch for any sustained outflow streak. That could be the real warning sign. Whether you're stacking sats or watching from the sidelines, this consolidation feels like a setup for the next leg once macro noise sort of chills out. Like, I don't mind this sort of Bitcoin sideways trade. Here, let's look at the Bitcoin price forecast. I'm not quite sure where we ended the week, but let's double check. Now, if you're sticking with me so far, thank you very much. If you have any questions or comments, please feel free to leave them in the comment section, either during this live or after this video, and I'm happy to get back to them. I know sometimes you don't have the questions right here on the spot. I'm happy to answer them posthumously. All right, let's see how this goes. Okay. Now, as this loads, we're going to check out what the Bitcoin price action is. Like, personally, this feels like a really good area. Like, I'm happy to pick up a little bit of Bitcoin exposure during this time period. And it can be in any way you want, whether it's through on-chain economy, whether it's through an ETF. It's really up to you. Your exposure, your way. I'm seeing MicroStrategies doing some incredible movement, or strategy making some incredible moves. So we could see that back at 400 in the near term future. Let's make a bigger candle here, because we're still in my orange box, right out at the edge of it, right? So I'm still willing to pick up a little bit, but this was sort of my area, like I said. So as we're moving through here, we're playing with the moving averages. We just touched the 200. We broke through the 100, the 50, and we broke through all of them. So we just bounced off the 200 right there, as you can see. So that seems to be sort of its resistance area. So if the next time we get a rally out of Bitcoin, that's what I'm going to be watching for. Will it break 81 half? Even 82,000, that would be a great signal that we're moving upward. Because once it broke the moving average, it stayed above it. But as you can see right here, this is the, I want to say, that's the 150. So this is the 150 moving average, and you can see it tapped it twice, came down, then broke through. But as you can see, the Bitcoin hit the 200-day moving average from this small 1-day chart three times in a row, and then came down. So whether the next week or so we're going to get sort of a retest of this 77, maybe even retest the 50-day moving average here at 75, not quite sure. We had a bit of a cross going on here between the 50 and the 100, and that's what kind of sent it higher, kind of broke through the 150 and then tapped the 200. That's a lot of numbers, which I really love. So if you're enjoying these numbers with me, thank you very much. But as you can see, it is just not wanting to break that 200 right now. So 80K seems like a good area, and I can, with a pretty high degree of confidence, say we're gonna get back to 75, even probably over the weekend. Saturday dumps off, Sunday rallies, futures pop up. Who knows? This is all a complicated hypothesizing game. But let's get back to our next subject. We're going to be bringing up other commodities like gold and Robinhood Ventures Fund. Oh man, if you're in that trade, congratulations. Pat yourself on the back because that has been making some incredible moves. But that's for later on in the segment. We'll get to that in just a little bit. Surprise, surprise, I was wrong. That is exactly happening right now. So if you're not familiar, Robinhood Ventures Fund 1 is a closed-end fund that has been one of the hottest and most volatile tickers on the New York Stock Exchange this week. It's a basket fund and ETF of pre-IPO companies, private companies that honestly I can't help but love. But there are really only one, maybe two companies in there that I'm really invested in. Personally, for me, it's Ramp. Here's a quick background. RVI launched in early March of this year as a way of everyday retail investors to get exposure to private high growth companies. Think pre IPO unicorns in AI, fintech, frontier tech. Portfolio highlights include stakes in AI, Databricks, Stripe, 11 Labs, Ramp, and others. It's managed by Robinhood's subsidiary, trades just like a stock. Here's the price action for this week. RVI was on absolute fire this week. It gave back some of the gains amid the broader market chop, but it surged on AI momentum and news of Robinhood filing confidentially for Robinhood Ventures Fund 2, the second fund. Ooh, we're getting a sequel. Hopefully the sequel's better than the original, but we'll see. Shares hit a 52-week high. Okay, shares hit an 8-week high because it opened earlier in March. Like, yeah, okay, it did hit a 52-week high, but it hasn't even been open that long. But that high this week was $77.39. Now, this closed-end fund opened at $25, dipped as low as $22 right after it IPO'd, because that was around the time the oil crisis and the Iran conflict started. So it wasn't doing well earlier that first initial week. But oh my god, that's almost 200%. Like, I just good job, self, for sticking with it. Now, it throttled back to somewhere in the low 60s. I'm not 100% sure where I would pick up more because it's still trading, what, twice the NAV price, which is $25. So it's valued at that price, but it's trading way higher than its valued price, which is not bad if you already hold it. But if you want to buy more of it, that can get a little bit dicey because you don't know if that valuation price is because it's worth that much or is it because it's being pushed up by retail investors like myself. Later sessions in the week saw some profit taking. Obviously, please take profit if you see it and it's just been 8 weeks and almost 200%. Yes, take some profit. But the trading halts triggered some big moves, and but by Thursday and Friday, it pulled back towards 52 to 57, around 5 to 7% down on days from its recent peaks. But with it being almost 200%, by all means, you deserve to cool off, Mr. and Mrs. Robinhood Ventures Fund 1. But from its IPO price of $21 to $25, the fund has more than doubled in just 2 months, and massive win for us as early holders. Though it's trading at a premium to its underlying NAV, like I said, with a lot of hype. So why the frenzy? Like, this is kind of important. So we got AI tailwinds. This is a good prospect of reasoning. Heavy exposure to OpenAI and other frontier AI plays like Ramp. Robinhood Ventures Fund 2 news, probably a good reason as well, because they're prepping to set up another fund with confidence and more retail venture capitalists capital access coming, as well as all of the retail investors like you and I. We just already pumped so much money into this. I'm not quite sure if we're going to see moves on RV2 un- until they give us a prospectus on what's going to be in it. Honestly, I don't know what they would put in it. I'm not quite sure what would be in it that I would want. Oh, I wouldn't mind Palmer Lucky's company. That I would mess with. I'm pretty sure that's still private. Yes, and Androl, something like that. Forgive me if I pronounce that wrong. I read a lot of these things and I don't really ever talk about it, other than with you here on the pod. All right, so here's a quick risk reminder for RVI. Closed-end funds like this can trade at big premiums or discounts. Liquidity is thinner than mega caps, and private valuations can shift pretty fast. It's a high risk, high reward sort of environment. So this isn't a full port situation. This is a I'm gonna dip my toe and hope my toe doesn't get bitten off. Be careful. Here's another takeaway though. RVI is sort of a poster child for the 2026 retail venture craze. If AI keeps delivering and RV2 launches strong, this could keep running. Who knows? We could see $200 by the end of the year. We could see the RV1 stomping out the Robinhood share price. Like they were coming up on each other. Like it was a $3 difference. Now, obviously, they trade at those prices for completely different reasons. Just a funny coincidence. Okay? But whether you're in it or just watching, RVI proves that retail investors are now playing in the same sandbox as traditional venture capitalists. Now, let's talk about a little bit of gold for a second. The price action for gold and silver this week was a little bit mixed. Silver did a lot more of that price action. The metals market gave us a textbook example of divergent behavior in a hot inflation, high oil environment. Gold traded at 4600 to 4700 range. It pulled back modestly midweek on the hotter CPI print, which strengthened the dollar and the yield, dipping towards 4600 to 4700 on the low end at points towards stabilizing, still sitting comfortably above 4500 as well as year over year, as well as it's up year over year. Though off its January all-time highs, which were 80, that's not it at all. 55.89, which is something we're going to re-see sometime soon, depending on how this crisis keeps going. Silver, on the other hand, was much more volatile. The star performer on relative strength, it surged earlier in the week up 6% in one session, briefly clearing $87 to $88 an ounce. Then gave back some of those gains on the CPI reaction, settling around 84 to 87. Gold and silver ratio compressed sharply from 62 to 1 down to 55 to 1. One of the fastest moves in years, signaling silver's industrial leverage kicking in very hard. Because they have so many uses for these metals. It's not just because they're pretty and they're shiny here. They have uses in solar, electronics, electric vehicles, and so on. So silver's dual role in all of these other things makes it a strong safe haven. But as far as overall takeaways go, central bank buying remains strong for gold. Silver faces persistent supply deficits, so that's another thing you might want to look into. If you're looking for maybe an asymmetric play on silver, maybe look for a silver mining company that or a gold mining company that primarily or has found some silver veins or got some new land that moves into silver because of the deficit. If oil stabilizes at any trade de-escalation sticks, silver could keep outperforming. Gold remains the ultimate portfolio insurance as this higher for longer trade world we're in. Watch for support levels like 4,600 on gold and $80 to $82 on silver. A break lower on both would need a major dollar surge or risk on rally. All right. Next up, Kalshi news. Now, prediction markets are very important to the overall macro now. I mean, we're seeing banks, we're seeing the Fed. Everybody's using this data to predict where things are coming, where things are going, and being able to hedge some of their positions, whether it's job losses, job gains. We're looking at ways to hedge big companies and big indexes. So, from shiny metals to the meta market itself, let's talk about it for a second. The prediction market platform that's exploding this year, Kalshi, isn't just another fintech story. It's becoming one of the biggest financial narratives this year. Massive funding rounds still dominating in the headlines. Just days before this week kicked off, around May 7th, Kalshi announced it raised $1 billion in a Series F round at a staggering $22 billion valuation. That's double its valuation from just 5 months earlier. The round was led by Kotu Management, with heavy hitters like Sequoia, Anderson Horowitz, A16Z, Paradigm, IVP, Morgan Stanley, and ARK Invest piling in. This puts Kalshi in rarefied air, one of the most valuable private fintechs out there right now. And I am elated to be part of the team. Like, even a friend of the family just feels so cool. Like, these people are incredibly altruistic and genius level intelligent. And just to watch them cook from across the board. Now, I'm not just talking about Tarek and Luana here, the founders. I'm talking about the traders. I'm talking about Kalshi Labs. I'm talking about Kalshi Politics. I'm talking about Benjamin Freeman. Like, all of these human beings are out there just relentlessly cooking. John Wang, head of the crypto division in Kalshi, constantly cooking something up. Like, I'm having a hard time keeping up with all my friends here, but they just impress me every day and kind of push me to learn more and more about how these markets function, the nuances. They're not just for trading for me. They're a information powerhouse. Like, I can see where things are going, where the traders think they're going because they got money on the line. Like, you're putting a actual money behind this yes or no on this binary trade. Now, there are some explosive growth metrics. Institutional adoption is on fire for Kalshi. Trading volume from big players surged 800% over the last 6 months. Annualized volume hit roughly 178 billion, more than tripling its in the same period. Market dominance, though. Kalshi is capturing the lion's share prediction market, actively often 70% of the weekly volume on prediction markets. Non-sports categories like politics, macro, crypto, mentions, geopolitics just crossed 1 billion in weekly volume. 1 week. We're not talking about sports here. We're talking about outside of sports. A huge shift from being mostly sports driven. There's also pushing into fun stuff like music predictions that have already done over 400 million in volume. If you follow the Grande 10 on X, that ooh, that trader is by far the best individual I've seen trade music on any platform, on all of X. This is the person making top dollar, trading what they know. Just like the stock market, ETFs, crypto, if you don't know what the heck you're trading, do not trade it. You don't know what the price action is like. You don't know how fast it could rip your face off, right? You're not going to go and predict whether, I don't know, Jason Aldean's going to come out with a new album if you've never listened to country, right? You're not going to go and try to predict if Bruno Mars is going to go play on actual Mars if you don't know if you like space, right? You need to do your research. Like, I'm going to push all of you to just continually research what you know more about, or research more about what you know, so when you do start trying to trade those facts and that knowledge, you feel confident about it. Like, once you start a trade, it's very easy now, right? You just click, poof, all of a sudden your money is in the wind. It could be a good wind, it could be a wind that pushes it towards a dumpster. But if you didn't know enough about your trade before you press the buy button, you're definitely going to know you didn't know enough after you press the buy button. Because when it starts to swing around, most likely against you because you didn't do enough research, you just guessed, you start to get all the palpitations, and then you freak out. And you probably sell short because you didn't understand the price action. Paper trade. Look at these markets. It doesn't cost you anything to just write it down and then watch. And then just put a check mark if you're right and an X if you're wrong. And you still won knowledge. It's like playing Jeopardy. You're not there on the show, but it still feels good that you got the answer right. Jeez. Sorry, I went on a bit of a tangent because people think this is gambling. And it's not gambling. This is high level trading, and you need to do your research like any other trade. But here's a quick takeaway on prediction markets. Kalshi markets are maturing fast, moving from niche gambling vibes, not gambling, predicting, to legitimate price discovery tools. Kalshi's 22 billion valuation shows Wall Street is all in on the trend. Watch for more regulatory scrutiny, but the momentum feels unstoppable. If you're not watching Kalshi markets alongside traditional ones, you're missing the crowd's real-time wisdom on everything from Fed moves to SpaceX timelines. Like, they probably already called when SpaceX was going to come out. Whew. This is a great show so far. I'm glad you guys are with me. We're up here a little bit of an hour. I got a couple more things I want to finish up, and I'm gonna let you guys go. But next thing up, the reason I'm wearing my Node hat is because Node celebrates its first birthday this week. Woo! Happy birthday, Node. Haole lahanau in Olel o Hawaii. To you and everybody who's managing that fund and that ETF for all of us investors who enjoy the price action for Node. Let's talk about what kind of performance it had this year. Year-to-date returns are around 30 to 33% on Node, an average of 10%, crushing the category. 1 year return roughly 73 to 77%, outperforming the broader digital assets category. From its early lows near mid-20s range to recent highs pushing $48 to $49, it's delivered serious alpha for the thematic ETF. This week's action saw some volatility, but the birthday's glow is real. VanEck themselves posted happy 1 year birthday to our Node ETF. The performance is worth celebrating. And to my ohana there at VanEck, congratulations on another powerhouse ETF from a banger of an ETF company. I love you. Thank you so much for Node. I will always rock this hat because I love celebrating the wins, and Node is a win. Here's a couple of companies that are inside Node if you didn't already know. Some of the top holdings are Bitcoin miners like TeraWolf, Cypher, Iron, 8hut, and Mara. Data centers, energy infrastructure, and semiconductor plays like SK Hynix. Direct exposure via VanEck's own Bitcoin ETF, HODL. Hold up. If you don't know HODL, you can combine it with Node, and all of a sudden you got a straight up powerhouse of a crypto blockchain exposure engine managed by the best ETF company on the planet. The fund dramatically rebalances based on Bitcoin market action cycles, more aggressive in bull phases, more defensive when needed. It's non-diversified and actively managed, so higher conviction, higher turnover. But here's a quick takeaway other than Haole now and to many more explosive years out of Node and the team there at VanEck. Turning one with triple digit outperformance in a choppy market year. That's a strong debut. Node shows how thematic ETFs tied to blockchain adoption are maturing and delivering real returns beyond just holding spot Bitcoin. If you believe the on chain economy is still in the very early innings, Node could keep shining. Of course, it comes with crypto level volatility. This is not financial advice, so it's not for the faint of heart. Happy birthday, Node, to many, many more. Love you guys there at VanEck. All right, now let's bring up our close here. Oh, just checking that's all good. All right, I think we're back. Just double checking. That was a long one. Thank you so much for sticking with me. I feel great about this pod today. Honestly, this feels like the best one yet. From my boys at T-Boy, this is my T-Boy. Great job, Mr. Edsman. Legacy Architect delivers. Macro reality check. Inflation is sticky again thanks to energy. Higher for longer is back on the table. Watch oil, geopolitics closely. Risk assets holding up. Equities, crypto, and venture themes absorb the shock better than bonds. Thematic opportunities everywhere, from rockets to retail venture capitalists, prediction markets, metals, and blockchain infrastructure. 2026 is rewarding conviction. Here are some final thoughts. Markets are proving they can digest bad news when the underlying growth story. Keep your time horizon long and don't chase every headline. Don't chase every headline. Trade what you know. If you've got a system and it works, stick to it. I love you. Thank you very much for hanging out with me here on the week that was, your weekly market recap. I am your host, Colin Edsman, and as